All right, it's 3 p.m. So let's kick off. Welcome to the Climate Tech Outlook 2024. Wonderful to have so many people join us. Before we dive in, a few brief notes. Feel free to introduce yourself in the chat with your name and role. Kindly ask the questions through the Q&A section. So we'll be answering your questions throughout. We hope for this to be an interactive session. We have a couple of wonderful experts joining us, so feel free to ask them anything. If any questions are not answered during the webinar, we will try to answer them afterwards. You can also send public or private messages in the chat. We will only take the questions from the Q&A section. So my name is Jacqueline van den Ende. I'm one of the co-founders and the CEO of Carbon Equity, and I will be your moderator for today. Before we dive in, few words on Carbon Equity. Carbon Equity is a climate fund investing platform that allows you to power the next climate tech unicorns with your money by investing alongside the world's best climate private equity funds. We believe that the climate transition is one of the biggest challenges of the coming decades, but also one of the biggest opportunities. As we need to replace literally every brick of the fossil economy with clean and fossil-free alternatives. And Carbon Equity makes it possible to invest in the world's fastest growing climate tech companies alongside professional investors by enabling low minimum access to our climate venture capital and private equity funds. We are doing that at the moment in the Netherlands, Germany, and Belgium with approximately 200 million assets under management and 700 investors on our platform. And if you'd like to learn more, obviously, feel free to reach out afterwards. But today we're here to talk about the climate tech outlook for 2024. 2023 was quite a mixed bag for climate tech. It was the hottest year on record. You will have most likely noticed this in the Netherlands. I would say it was the wettest year on record, and we definitely noticed that. But it was also a year that saw a record amount of investment in renewable energy. For every $1 invested in fossil fuel, 1.7 has been invested in renewable energy. So that's encouraging. In the United States alone, 170,000 clean energy jobs were created. So there has been a lot of progress despite the markets. The markets were tough in 2023. We saw a very long bull run 2022 that ended. And in 2023, we saw sky-high inflation and sky-high interest rates, which obviously had a negative effect on investments and on valuations. Still, 32 billion was invested in climate tech, so not shabby. But the question is, what will this look like in 2024? And to discuss this with me, I have invited some wonderful panelists today. With me, I have Murray McCaig. He is a co-founder and managing partner of ArcTern Ventures. He is a very experienced entrepreneur. He founded and built two successful companies that were venture-backed, and he actually exited both of these companies. He has been the managing director of a family office, and he has also been an Olympian, and he competed for Canada in the 1992 Barcelona Games. Murray, in what sport was that?
I was actually a sailor. I was a windsurfer, so I know the Dutch have had a lot of success in that sport, and I used to train actually on the IJsselmeer back in the day.
Wow. Well, love to find out more about that later. We have with us Iris ten Haven. Iris is the head of science at Extantia. She is a trained chemist and a PhD, and she turned from a scientist into a climate venture capital investor. She has studied at Utrecht University and at Stanford University, and she primarily during her studies worked on the fundamentals of converting carbon into sustainable fuels, otherwise called as synfuels. So that's tremendously fascinating, Iris. And she is the head of science at Extantia, where she combines science with making investments into gigaton scale impact companies. And last but not least, we have Thomas Mosk. Thomas is an economist and a lecturer at Queen Mary University in London. Thomas's expertise lies in corporate finance, financial intermediation, and political economics. I highly recommend following Thomas on Instagram. He is actually a super interesting, always has super interesting facts to share on Instagram, a little bit like Freakonomics. So I recommend following him. He was a PhD researcher at Tilburg University and at the Kellogg School of Management of Northwestern University. He was a postdoctoral researcher at the Center of Excellence SAFE and the University of Zurich as well. Welcome all. I'll take the presentation off screen so we can properly see you. All right. And then I will remove the spotlights. Let's see. Let's see if we, yes, all right. Excellent. So thank you so much for being here. And to kick off, I just wanted to grill you with three very hard questions and short answers for each of you, a bit of a fire round set of questions. What surprised you most about climate tech in 2023 in one or two sentences? Iris, may you go first?
So actually, I'll start with saying sometimes it's not actually about the fundamentals of technology, and that's coming from a chemist. So I think we had to realize that sometimes, it's done a bit better when it's done instead of when it's perfect, let's say. So better do something than stick around till something's perfect.
That's a great point of view. Yes, better to have more progress with less perfect impact than perfect impact with no progress. Cool.
Exactly. Yeah.
Thanks. Was that your main insight from 2023?
At a high level perspective, yeah. I think we can go into detail with specifics on technology later on, but I would say, high level, yes.
Murray, what surprised you most about climate tech in 2023?
Yeah, maybe I'll talk about just like, on the ground here at the lowest level possible. I mean, 23 was a very challenging year for companies to raise capital. And, the majority of climate startups, like all startups, are burning through capital and they always need additional funding. And, I think we had a lot of new entrants into this climate space who continue to fund at very high valuations when the right thing to do was aggressive restructurings to get enough capital into these companies and ensure their longevity over time. I think we're now seeing, even at the start of this year, some even more challenging situations, which given we've just raised a new fund, we're pretty excited about because there's some special situations where you can pick up pretty good deals.
Yeah, definitely saw a lot of impact on valuations in 2023. Thomas, not sure how well versed you are in the specifics of the climate tech investment market, but any things that surprised you in 2023 from the macroeconomic point of view or climate tech point of view?
Yeah, so I've two things I want to share. Like, I think in terms of as an economist, 23 was the year where climate tech and sustainable finance became mainstream in economics. So that's a really big achievement. And if you go to the biggest conferences, there are multiple sessions on sustainable investing. So I will try to kind of share some of these insights. And that's also what I love to do, is bring these insights to everyone. So just an example is that before, I think last year, there were hardly any macroeconomic models with the input energy. So it might surprise you, but also before the financial crisis, there were no macroeconomic models with the input banks. So energy, they're like now like top macroeconomists who look at the energy transition and how that affects the actual economic growth of countries. So just to give an example. So in a second thing, and we're going to talk about that, is I was surprised by kind of like the backlash on ESG in the US. So there is a lawmaker in New Hampshire who actually proposed a law which put some jail time on people who invested public money in ESG. Well, the chances that will be like, turn into law is very low, but it is a signal. And I was surprised that's like there is such a big backlash in the US, but we're going to talk about that later. So that's it for me.
Thank you. Cool. Yeah, that was definitely surprising. Then what is your number one prediction for climate tech in 2024? And that's a very big ask. So keep it high level to your number one single most important prediction. Iris.
So I think I'll start by saying that I think we're going to slowly see supply chains being built up for more locally produced goods. And that actually is, I think, underlined by a couple of things that happened in Q4 last year. So we first of all had the carbon border adjustment mechanism, which stated that from October 23 onwards, importers are actually obliged to report on the carbon that's emitted with the product that they're importing. And that will go on to, let's say, 2026, where they are actually obliged to pay for, let's say, the carbon that they're emitting with the imported goods. So because of that, I think more, let's say, there's I guess, a risk, but also an opportunity to build up more sustainable and more sort of resilient supply chains for materials like, think of commodities like steel, cement, but also critical raw materials. Because on top of the carbon border adjustment mechanism, we also saw China actually curbing exports of some of the materials that they're currently dominating the market in. So think about graphite, but also rare earth elements. And that's on the one hand alarming, but also, again, an opportunity for companies in Europe to start building up supply chains, start recycling where they can. So, for example, battery materials, wind turbines all contain these critical raw materials. And I think we'll start in 2024 that we actually, forced by regulations and exports being curbed, we'll see this building up.
That sounds like a very positive trend to me. Thank you. Very clear. Murray. Oh, sorry, you are muted, it seems.
I would say that the big money is coming to the party this year. And it's part of a continuing trend. With ArcTern, we launched this over a decade ago, and you could have gotten all the climate tech investors together in my living room. And now there's hundreds of climate funds, but still, that's not a lot of money. This is early stage capital. And we're doing a lot of the kind of the base level work required to bring innovation to the market. But now you're seeing groups like Brookfield, that raised, I think the first fund, maybe 12 billion. And in less than 2 years, they deployed it.
Wow.
Brookfield, I was out with with Mark Carney, actually, former head of the Bank of England and Canada, who's now with Brookfield, and they are about to announce a massive, massive fund, more than double the size. And you're seeing, coming out of COP, the UAE was announcing 40 billion into the space. BlackRock is very jealous. They're moving as quickly as possible to launch equally large funds. And when this kind of capital comes to the table, real stuff starts to happen. People can see there is an incredible opportunity to make money while decarbonizing, and that's going to be good right across the board. Governments are not moving fast enough, and we're going to talk a bit about that. So I'm excited about that continuing trend with the big money coming to the party.
Yeah, exactly. And for example, Brookfield 12 billion, is that in infrastructure or also?
Yeah, it's more private. It's a combination private equity in infra, but more on the kind of the corporate side, not the project side.
Yeah, interesting. And then one small follow-up question, and we'll discuss this in more detail, but are there enough opportunities? Are there enough investable opportunities for all this big money suddenly flooding the markets?
That will be the question. It's hard to tell. I mean, what you have seen is, there's a lot of, even at this early stage where we live, there's a lot of capital sitting on the sidelines. Everybody's nervous, not sure where to place the capital. So it tends to flow to the highest quality deals, which are then very overpriced. Well, this year, I think you're going to see a slight broadening of that, people willing to take more chances. But I think with more capital, innovation happens faster. And so it should create more opportunities. Will the supply and demand of capital be balanced? It never is, but.
Exactly. Cool. Thomas, your number one prediction for climate tech or the macro environment?
Yeah, well, my number one prediction is a actual big crackdown on greenwashing. So it's partly because of like new regulation in the EU, but also in my own work. So there are literally like armies of PhD students and top researchers using big data to identify like who are the greenwashers and whether sustainable is really sustainable. And that's basically also good news for you, because kind of weeds out the players in the market who are actually not so sustainable. And you might ask, who's reading these papers, and is it just for like academics? Well, partly yes, but on the other hand, it does land on the desk of policymakers in Brussels, in the UK, and New York. So like a lot of top researchers, they present their work there. And there is a flow of research coming out, and I will preview some of them if we have time, showing that a lot of like big ESG funds are not really engaging, are not really having a better portfolio on ESG criteria, like really shocking facts. And well, that's definitely something the EU wants to actually prevent. So I do see that 2024 will be a good year to get rid of greenwashing. So that's my prediction.
We'll talk a little bit about the effects on the carbon credits market as well down the line. Then finally, to round up this fireside round of questions, will climate tech investment, at least within venture capital and private equity, increase, decrease, or stay the same? What's your vote, Iris?
Yeah, so I think, Murray already alluded to it a little bit, and I'll side myself with that. So I think climate tech investments will continue to increase. Even in the past year, where we saw a decrease of the overall investment market, climate didn't decrease as much. So that's quite a positive sign, I would say. And I think slowly financial investors, so let's say the ones that are just in it for the financial gains, also start seeing the opportunity in climate and not just the risks. So yeah, maybe let's say a purist scientist or environmentalist might say, oh, okay, so you're working with the people that are just in it for the money. But the truth is that we actually need that, right? So whether we like it or not, money makes the world go round, and our green alternatives are great. But in the end, they're going to have to compete with the gray product, at least in the long run. So I think, yes, it will increase.
Fully agree. Murray, I think you already voted. Anything to add?
Yeah, we'll see more capital at every single level in the capital stack, from early seed capital through to late stage project capital, is my opinion.
And Thomas, looking at sort of like what's happening in the US, or sort of like the backlash on ESG, what are you expecting from levels of capital invested in climate tech solutions?
Well, non-US, it will definitely go up. In terms of the US, it really depends on the elections. We're going to talk about that. But basically, one of the key acts of Biden is the Inflation Reduction Act. And that sounds like inflation, but it is basically an act with a lot of subsidies on on renewable energy. And that's the main target. Like Republicans hated that act. So nobody voted in favor of that act. If Trump wins, then that's the first act which will be destroyed by new deregulation. So that could have a disastrous impact on subsidies in the US. We have an equivalent in the EU. So basically, like all investments in the EU are safe, but it will definitely have an impact on innovation and climate innovation in the US if these acts get repealed or deregulated, or some of these subsidies will not be there anymore next year.
Thomas, can I ask, I mean, it would be hard to imagine a complete hacking of the Inflation Reduction Act, because right now a lot of red states, Republican states, seem to be taking the bulk of the subsidies coming out of the Inflation Reduction Act. I could see it being rebranded, much as Donald Trump rebranded the NAFTA agreement. So I don't see it disappearing, though. There's too much on the line.
Well, Dodd-Frank also did not disappear under Trump 1. So Dodd-Frank is like the banking act, but he did like try to undermine things, and he also managed to do that. Like with the Consumer Financial Protection Bureau, he put somebody in place who had actually almost destroyed the organization. So basically undermining certain aspects. But I agree, like such an act could not be replaced, in particular if Republican states are benefiting from it. So then these will actually try to prevent that. But undermining some aspects, definitely, that's what I expect.
Yeah. What do we expect in Europe? Because indeed, 2024 is going to be a very interesting year. 64 countries globally are having elections. 1/3 of the global population, I think perhaps even more, is going to the ballots. Also in Europe, in the Netherlands, we saw quite a right swing in the election outcomes. What are you expecting politically in Europe, and the commitment of Europe and policies such as the European Green Deal? How do you expect that to be affected by elections this year, Thomas?
Well, yeah, as an economist, election actually translates into policy uncertainty. So basically, if you look, there's a beautiful measure of climate policy uncertainty, which actually measures like how much it's based on newspapers, how much like climate news and climate policies are uncertain. And that's basically what will happen. There will be like a peak in uncertainty about these climate policies. And at the end, like the more uncertainties, that's something investors don't really like. So in a sense, in the run-up to the elections, then you will see the uncertainty. But once this is kind of like when the outcome is there and the new policies are in place, it will also like stabilize and go back to normal levels. But I definitely see expect like a big spike in uncertainty, in particular in the US, and then like European countries, since like there are European elections. That's one aspect, like the European Parliament. So that could have an effect, but I think less than the presidential elections, which really could turn a policy upside down. I do expect more uncertainty, but in Europe, not that much compared with US.
Cool. Reminder to the audience, feel free to ask questions through the Q&A. A couple of questions are coming in, and some will be answered in the Q&A section, and some I will take on here in the panel discussion. Just staying with macroeconomics a little bit longer, Thomas, what are we expecting in terms of inflation interest rates by and large in 2024 when you peer into your crystal ball?
My crystal ball, yeah. So, well, it's a crystal ball a lot of people have, because like already you could see what the expectations are for the interest rates in 1 or 2 years. So basically, there is a consensus that we kind of reached the peak at the level of the interest rates. So most economists like say, and central bankers say, well, there's probably not an extra increase coming. Right now, rates are stable. I think a key question is whether like the interest rates will have the shape of a Matterhorn, which with a sharp peak and a descent, or a table mountain where you kind of stay longer at a higher level. One thing I want to give you is if we are kind of hoping for pre-COVID interest rates around 0, I think that's something which will not happen anytime soon, unless a really major crisis hits the European and world economy. But basically, expect definitely a decrease in interest rates. You can already see it right now in the longer term interest that they're kind of lower than like the interest rates which are there today. But there are a couple of uncertainties in this descent, which could actually pin down whether it's a quick descent or whether it will take 1 or 2 years to go down to a 3% level. So supply chain problems and geopolitical problems that could put extra pressure on prices and actually make the inflation go down less than expected. So any like trade conflicts with China, like that could also put pressure on prices. So basically, how it looks like right now is that interest rates will go down, which is good for investors. It's not a guarantee. So and if anything happens, it's not an increase, but probably that it will take a little bit longer to go down to a 3% level. 2-3%.
Interesting.
Yeah.
So Matterhorn or Table Mountain
Yeah,
type
let's hope
interest.
for the Matterhorn. Like, yeah, that would
Yeah,
be good
exactly.
to have.
Would be good for general clean tech. Cool. And then one final question on the macroeconomic side. 2023 was sort of described as the year in which the recession never came.
Yeah.
There was a lot of talk and it didn't come. Are we finally going to see some form of recession in 2024, or did we just skip it altogether?
Well, I think, the economy, in particular in the US, really benefited from like the rollout of AI. So I think that's a factor which still will play a role. You do see that interests are biting right now. So especially in the UK right now, the economic growth is really slowing down. I expect that the UK will be also one of the first central banks to drop interest rates. So if you keep interest rates for a very long time, then at some point you will see a drop in economic growth and even a recession. Surprisingly, last year the recession never came, so it was a kind of a soft landing because like inflation did go down quite a lot, but we are not yet there. So basically, so that's basically what if you wait long enough, that could result in a short period of negative growth, but that will be also the point where central banks are going to decrease the interest rates, which stimulates the economy, basically.
Yeah. Great, thank you. Let's segue into tech. Murray, in 2023, what were the biggest technological breakthroughs that we witnessed? What technology saw the biggest sort of technological progress?
Yeah, I saw your question here and I was like, this stuff just doesn't happen in a year. There's a lot of hype that happens, but, we're talking about large scale infrastructure. We're talking about, building new manufacturing-based facilities. So we've seen some really interesting things happening. Companies like H2 Green Steel out of Sweden receiving like an enormous amount of public funding, which before probably couldn't have happened, but it just shows the stage we're at with governments really getting desperate, trying to move the needle here. And I think, seeing a slight uptick in sort of this first of a kind project capital where governments are willing to make some more significant bets is going to allow technologies that have been sitting on the sidelines for a very long time to come to market. Like I haven't seen any massive technology breakthroughs in the past year that are so game changing. And we generally think like it's not one solution, it's, thousands or hundreds of thousands of small solutions. And there's so much opportunity from a venture perspective to generate fantastic returns. But, silver bullets, I mean, maybe fusion, but that's not coming online for a while.
Yeah, no, for sure, for sure. Iris, did you witness any scientific breakthrough specifically last year?
Yeah, I guess on the one hand, I have to agree with Murray. Like these things often don't happen super quickly. I will make a comment on this because I'm personally quite excited at this point in time about carbon capture technologies. So we did actually witness and experience a couple of breakthroughs in the past year. Some new technologies emerged in carbon capture that actually enable low energy input for regeneration of the capture sorbent, for example, which translates into lower than ever carbon capture costs, which is what we want because
Sorry, just that went a bit quick and a bit scientific.
Yes, okay. So normally I think maybe let's start from a more general perspective. So I think from the IPCC and a couple of other regulations, it's clear that if we want to even stay close to the 2-degree mark in terms of heating up the Earth, we need to actually capture carbon dioxide from the atmosphere, which we have been emitting as a society since like forever. And carbon or CO2 can be captured from the atmosphere with a sorbent, which is basically a solid material, but it can also be a liquid material that absorbs the CO2 gas. And then the gas needs to be released again from the sorbent to be able to either store it or to convert it into something useful that we can use. So the main, I guess, typically the main costs are the energy that is needed for regeneration of that sorbent, because that costs a lot of energy. Now, the specific breakthroughs that we've seen in the past year are often related to lowering that energy input for sorbent regeneration and therefore lowering the capture cost overall. So that's very exciting. And I think maybe from a more kind of macro-ish perspective, we also saw in the past year and the actual first billion-dollar acquisition of a carbon capture company, which was Carbon Engineering. So that's quite I would say, a positive signal for the carbon capture sector. And if we continue to, let's say, develop technologies, continue to have breakthroughs, I think us, at least as a fund, we feel fairly confident that we can get to a cost of less than $100 per ton of CO2 captured, which actually makes it a commodity in that sense, a commodity product. So that's quite exciting. Yeah.
That is super exciting, I have to say. I'm going to go to a couple of audience questions. One question Yumad Khan asks is, amongst the various subsectors in climate tech, where do you see capital being prioritized? So what are the sectors or subsectors that are currently receiving the most capital? Murray, can I start with you?
Well, I do believe it's the mobility sector. And we, of course, are doing a lot of investing in that space. I mean, I think we're slowly getting to some tipping points in major jurisdictions where you will quickly flip from the majority of vehicles being new vehicles being sold being combustion engine vehicles to electric vehicles, much as we saw in Norway. When that flip happened very fast, because all of a sudden someone said, wow, you know, it makes no sense for me to buy a combustion engine vehicle because I might not be able to even sell this thing in 5-6 years.
How fast was that in Norway? Because indeed, 86% of new sold cars are electric, I know now. What was the time span of that sort of like mindset flip?
Yeah, well, it took about a decade, but the actual acceleration when it started, you know, as you started to get over 20%, it moved very fast after that. And so we're starting to see that in places like the US market. And we're already seeing it kind of over in China and such. And that is going to create just a massive demand for electricity, but also, you know, all the surrounding industries. And so we see just a wealth of opportunity here in this space. We recently invested in a medium-duty electric truck manufacturer based out of LA called Harbinger Motors, class 4 to 7 trucks. These are kind of these American-style boxy trucks you'll see FedEx and UPS driving. We invested in a company called Recurrent, which is based out of San Francisco, which is using AI to determine the health of a battery in a used EV. So when you go onto a marketplace to buy your used EV, well, how do you know if the battery health is any good today? You don't. And so they provide you with a very detailed battery report that you can rely on that'll tell you about the battery range, charge times, et cetera. So this entire ecosystem around mobility is for us an exciting place to be putting capital right now. And the impact is clear, it's direct, it's today.
Yeah, exactly. Yeah, absolutely. The near-term impact is super important. Another question from the chat, Misha, perhaps for you, Iris, which industries, topics within climate are you personally most excited about? You already mentioned local supply chain. What are the themes you're truly excited about at the moment?
Yeah, I'll answer that, but maybe I want to add a little bit to what Murray was saying earlier. So you mentioned mobility as a sector, but actually when you compare it to its relative emissions, the sector's mobility and energy are actually overfunded when you sort of normalize it to emissions. So I'm actually personally more excited about all the sectors that are currently underfunded, which is the built environment, industrials like steel, cement, but also raw materials. And I think also food and ag tech is underfunded when you compare it to mobility and energy. But yeah, as mentioned before, go for it.
No, I was going to say there's a reason they're underfunded, and that's because returns have lagged in those sectors.
Yes,
And people have not figured out how to rapidly scale businesses in those specific sectors. So I agree with you, Iris. They are underfunded, and the planet needs more capital there. But markets are what markets are, and we need to drive more returns too.
But that's actually why I'm personally also quite excited about the carbon border adjustment mechanism, because it will actually level the playing field. And on top of that, the sort of China curbing its exports will actually force us, at least in Europe, I think, to build up more resilient supply chains. And that will happen by more investments in industrials, for example. So I would say, yes, I'm personally quite excited about, for example, the critical raw materials space, because I see many opportunities for us to build up resilient supply chains. I'm also quite excited about industrials like steel and cement, because due to the carbon border adjustment mechanism, it will become economically more interesting to start producing that in Europe, actually.
Yeah, exactly. Yeah, that's incredibly interesting. The critical raw materials through Breakthrough Energy Ventures, we're invested in a venture that has an AI which can help detect critical mineral or critical raw material reserves, and those are exciting developments.
Yeah. Little spoiler, because you're also, of course, an investor in our fund. We'll probably be announcing in the coming month, because we did a deep dive on the topic mining and raw materials last year, and we're currently executing on an investment in the space. It's very exciting. So
awesome! Oh, that is super exciting. Oh, do keep me posted.
We will. Yeah, we will.
Indeed, sticking along with this topic a little bit, Stefano Negri asks, during the gold rush is a good time to be in the pick and shovel business. So that's a great statement, Stefano. What are the pick and shovel of climate tech? What are in your view, the best profitability bets? Thomas or Murray, do you have an input on that?
Sorry, Jacqueline. Can
Go,
you repeat that again?
Yeah. Thomas, did you want to answer that question?
No. So I will.
Sorry. What are the best profitability bets? So what are the most underfunded opportunities that you're seeing?
Yeah, I don't like, it's very difficult to look at that on a macro basis, right? Because within any given sector, you have companies with, very different business models, some more scalable than others, everything from software SaaS plays down to deep tech science projects that will require a decade to come to market. So it's not so much the sector, subsector, it's really the company business models. And then, of course, all the other factors that make a successful venture, the team, the technology approach and other key criteria there. But if you look at something like a hard to abate sector like cement, you could be developing a new type of cement to compete with Portland cement, which is the global standard. And I will tell you that's going to be extremely difficult to get approval on in structural developments. Or you could be using, say, AI to look at how you're mixing various inputs into your Portland cement. And that can be adopted next week. So just to kind of provide a contrast there of business models.
Yeah, good point. And for investors, those business models are super important. So you can have a little bit referring to what Iris was saying in the beginning, you can have the perfect technology, but if you can't actually sell it and integrate it into the existing supply chain, into the existing way that incumbents are doing their business, and then the impact will be less than if you have something that you can sort of plug into existing processes.
Yeah, we're also big fans of retrofitting, by the way. So working within the existing regulatory frames is actually quite important, because we don't want to bet on, let's say, regulations changing, because it might take years.
Yeah, exactly.
I think,
sorry, go ahead, Thomas.
Yeah, so in terms of exciting opportunities, so basically a lot of climate tech requires a really big upfront investment, and I think that area suffers a lot from high interest rates, because if like money is expensive, then it's very difficult to get financing and actually get to a valuation which is interesting for investors. So I do think that these projects, and I think, Jacqueline, you know more which projects they are, which require a lot of investment up front and get a lot of only revenues, cash flows in a decade, like if the interest rates go down in 1 or 2 years, like these projects become fundable and become very interesting, I think, for climate investors. But I'm gonna open up the discussion, which type of projects are exactly like in line with this like big upfront investment and revenues which take multiple years to actually come in. So I'm just curious whether you see some of these projects also right now being unfunded and might get funded in 1 year.
Yeah, that is a good a very interesting point. So interest rates were very high last year. Before there was a lot of almost free capital, and then that dried up dramatically. And in climate tech, there are a lot of capital intensive type projects. Murray and Iris, what have you seen? How have these companies sort of in growth stages that require a lot of upfront capital, how have they managed, and what is their outlook in 2024 to survive despite high interest rates?
Yeah, good question. I think as I guess as an investment fund that mostly does hardware investments, we talk about this stuff all day. So I think to come back also to business models a little bit, as Murray said in the beginning, like you have, of course, the build, own, operate, as in build factory 1, operate factory 1, and then build factory 2, operate factory 2. This typically takes quite long. And as Thomas said, it's even harder to do this with the current interest rate being so high. So we often actually prefer business models like tech or IP licensing. So let's say the company invented something, they have a patent on the topic, they can license that technology to someone else and unlock early and quick revenues that way. So we do really like that business model. That being said, you still need to build often at least a demo or a pilot plant to show that your technology is working kind of at scale. And for that, I mean, next to, let's say, that, you also, of course, have grants available that could help with early stage financing of these kind of projects. Murray, how do you see that?
Yeah, well, comment. I mean, licensing is a really tough business model. You need to hit a massive scale.
Yes.
And I've just, I haven't seen any climate tech company build a successful business around licensing yet, unless it's kind of a small sole proprietor who sold off one patent. On the interest rate side, it has been a tough year, right? I mean, I would say the US solar market, we've seen it hit very hard. And this is both from kind of large scale, projects down to individuals installing solar. And we've got a couple investments in that space, and it's, there have been setbacks, but, I think we're quite optimistic about this year and the coming years. And it is a long-term game here. And we're going to see more solar being installed at the residential level and the, large scale commercial project side too.
Yeah.
But yeah, I just think you've got to be able to have the right investor group to kind of weather the storm. And that's what we've been focused on with companies in that solar and wind sector.
Yeah. Talking about another hairy topic, carbon credits as a revenue model. Projects such as direct air capture primarily rely on carbon credits as a business model. Last year was a big backlash on carbon credits with a lot of haziness around the quality of carbon standards. Thomas, you mentioned in research into greenwashing. To what extent have you been doing research into the quality of carbon credits, and how do you see the market for voluntary carbon credits develop in the coming year?
So I think research on voluntary and in general voluntary coalitions, I think that's like not necessarily carbon credits, but it does show that it's not always so reliable and so impactful if people like simply gather in a voluntary coalition. So basically, it does so basically like the carbon there's a carbon group which is pretty effective in countries where there are tradable credits, but basically, actual research on carbon credits I'm not really aware of. So I'm aware of like several like climate initiatives around investors where there's research on, but not specifically what carbon credits do. Basically.
Maria, how are you seeing that develop, the market for voluntary carbon credits? Do you feel that will bounce back after a bit of a destabilization, or how do you see that developing?
Yeah, I have two different opinions. I do think it will slowly come together as larger entities that have higher levels of trust with buyers move into the marketplace. So fewer startups in this space. As an area for investment, we're not really excited about it. We don't see any kind of winner-take-all opportunities here on the startup side, and therefore, it's going to be a lot of smaller subscale players coming together under a broad umbrella. And so we have not yet found something that really gets us excited from an investment standpoint.
Exactly.
And then there's kind of the moral side of this. Are people using these offsets instead of actually making required investments to actually lower their carbon footprint? And that's where I just, personally get frustrated about that, because, we need to see actual investment and progress towards lowering footprints here, not
Totally agree. In the
not
last 10
greenwashing.
minutes, yeah, totally. In the last 10 minutes, just want to zoom in on a few technologies and a few more questions from the audience. Razvan Vasia Perjou, sorry for butchering your name, asks in the Q&A, what do you expect in the future with respect to implementing AI in carbon technology or climate technology? Iris, do you have a perspective on this? What AI innovations are we seeing within the climate tech market?
Yeah, I think so. AI is generally within the investment world becoming quite a hot topic, but for climate tech investors, I think we kind of have to see how it fits in with our fund thesis, etc. That being said, I think us as a fund, we're generally of the opinion that software can have a supportive function. So, for example, managing renewable energy, balancing the grid, but it's not the main solution to actually tackle climate change. Like greenhouse gases just can't be removed from the atmosphere with another app or software solution. So we need hardware, we need chemistry, we need engineering. So that being said, hardware should be the main thing. To come back to AI, I think it can have a very interesting supporting function in, for example, faster experimentation and data analysis. So it can help us speed up this sort of iteration process that we're already doing. So it's exciting, but shouldn't be, let's say, the main focus of climate tech.
Do you see, for example, AI being applied in things such as cell-based meat, which are extremely research intensive? Is that like an application area where that could be relevant, for example?
I'm not aware of a specific example, but as I said, it could help, for example, in speeding up the process. So if you do experiments, you might be able to automate some of these experiments. You might be able to analyze the data faster if you implement AI in the data analysis process. So I would say I do see opportunities, even though I'm not aware at this point in time of a specific company doing it that way.
Yeah. Murray, in Europe, at least in the Netherlands, grids are really full to the brim. A lot of companies are really waiting to be connected to the grid. On one hand, it's really good because there is so much sort of feed of renewable energy stock, which has been rapidly growing. But on the other hand, there are sort of like very near-term immediate grid congestion problems. What innovations are you seeing that can help solve grid congestion in the near term and at scale?
Yeah, great question. Well, maybe I'll continue on the topic of AI, because we've looked at a number of companies, particularly in the US market, that are leveraging AI to identify easier points for building projects and getting grid connectivity. But the issue is complex, because depending on the cost to put in an application for a grid connection, you just see, I mean, I know a lot of people in the project development space, they're just, taking a shotgun approach to putting in as many applications as they can. So when you look at the data, you're like, oh my God, there's so many people wanting to connect to the grid, but it's not actually correct. Those projects, for the most part, are not going to be built. They're just looking to see where they can get the fastest connections. Yeah. But it is an issue. I'm hesitant to make investments there because it's a bit of a regulatory issue that we don't like to invest in companies that require regulatory change or taking risks around government policy and subsidies. I will say on AI though, like I think AI is absolutely critical to so many of our climate issues. In our Fund 3, we've been deploying capital over the last year. We've made 8 investments. I would argue that 5 of those 8 investments are AI companies. They would not exist without their massive investments in AI, which are, you know, sometimes being combined with hardware to deliver a full and complete solution. But you know, AI is like, it's like, you know, if you're not using data science and the internet, how can you exist in this modern world, right? And so, you know, even our companies that are not AI companies at the core are heavy users of AI. And if they're not, we're probably not an investor.
Yeah, exactly. Yeah, super interesting. We'll be more and more of an enabler. We spoke a little bit about direct air capture. Iris, Ashley Lynn asks, how do you see the emergence of different carbon removal technologies? And what pathways are you most excited about?
Good question. Yeah. So I think when direct air capture first started, the main I guess generation 1 of carbon capture is like a solid sorbent that captures the carbon dioxide from the air and is then regenerated often with, let's say, steam or with high temperature heat. And yeah, this was generation 1, quite expensive, energy intensive. And right now, I think generation 2 and 3 were actually, yeah, let's say more novel approaches. So like electrochemical pathways, we're quite excited about, and I've also done an investment in the space. There's also combinations of these materials. So for example, instead of using high temperature heat and steam, you can also use waste heat recovery to regenerate your sorbent, which is really interesting because we have that waste heat left over anyways. Or voltage to make the CO2 go off the sorbent, or for example, pH swing, where you play with acids and bases to release the CO2 from the from the sorbent. So I think the sort of diversification of technologies is in generally what I find quite interesting, because the more we reiterate and the more combinations of technologies we try, the higher the chance that we actually come to a technology with really low energy input.
Interesting. Super exciting what's happening in that space. Thomas, emerging markets. We haven't spoken much about this, but what is your perspective on the amount of funding or climate tech development in emerging markets, in markets such as India, for example, which are really sort of leading the charge in Asia?
So in general, like emerging markets also benefit from lower interest rates, because if interest rates go down, US investors are actually seeking opportunities abroad. So that's not just like climate tech, but it's in general like capital flows are going from the US to other countries. If there's less uncertainty, if the interest rates are lower, then basically capital seeks other opportunities abroad. So I was surprised to see that, like, well, in China, I think the second or the first sustainable bond market. So that shows basically like it's bigger apparently than the US. You could also question whether China is really like emerging markets, but that's another discussion. But basically, you do see that the investment levels are really high. And I spoke with a friend who is like in hydrogen, so he's a researcher in hydrogen technologies, and he said, well, all of the big hydrogen extraction plants are built in China right now. So I do see that there's a lot of activities, not just in Europe and in the US, but when it comes like ESG measurements and disclosures, a lot of ESG investors in a classical sense, they want to invest in assets with an ESG rating, and a lot of the companies in these countries, which might be really sustainable, they don't really like have a regulatory framework where they have these disclosures to kind of put the label ESG on it. So in a sense, that's kind of like, therefore it's like the ESG investing is heavily biased towards like EU and the US, because here we have these disclosures, the ratings, etc. So it's basically unfair, and it's really important that investment projects in these countries also get and disclose informations in such a way that we are able to rate them, and then that capital could flow into them as a sustainable investment.
Great. Final two questions, one audience question, one question from me. First, fireside round of questions. Valuations, up or down or neutral this year? Iris?
I think neutral or slightly up.
Okay, cool. Murray?
Both. I think you'll see investors starting to understand a need for quality. And by quality, I mean companies getting market traction, growing the top line. As we at ArcTern always say, if you're not making money, you're not having impact. And those companies will be highly attractive. They will pull in more capital and the valuations will be higher. And the ones that are not doing that will be toast.
Yeah.
Down.
Yeah, I agree. So I think it took us about 60 years to get the level of financial disclosures we have right now. And if you compare that with ESG disclosures, it's really lifting up right now. And I think in the upcoming year, and that's also my prediction of AI in the finance industry, is that we're gonna develop so much better measures in order to assess the quality of these investments, and then indeed the companies which have that quality will absolutely benefit from better information. So the information asymmetry between the investor and the project compared with standard financial information is still really big in the ESG sphere.
Cool. And finally, the exit market, better, worse, or the same, Iris?
I think the same or slightly better, similar to valuations.
Okay. Murray?
Can't get worse.
It couldn't get worse. That's actually totally
So
true.
it's going to go, yeah,
Bad.
it is going to be better. I know we've got a couple companies teed up looking at public listings in the US market, and we our fingers crossed that the IPO sector opens up again here.
Cool. Thomas?
Yeah, I think it will get better, but maybe normal IPOs, so non-sustainable IPOs, need to kind of grow first, and maybe then climate tech will follow a little later, I would say. But definitely there will be more coming up in the upcoming 2 years.
Yeah, and maybe small comment. I think also we all are mentioning IPOs, but I think lots of hardware-heavy businesses are maybe also more promising when they're acquired or merged with a larger company as an exit scenario.
For sure. Strategic exits, definitely. All right, so the conclusion on the exit market, the only way is up. I would like to conclude here. Thank you so much for joining us today in this webinar. Murray, Iris, and Thomas, was really wonderful to have you. Thank you to the audience for your active participation. Really grateful for your questions. If there are questions that you would have loved to ask that were not answered, please email us at info@carbonequity.com and we will get back to you or put you in touch with Murray, Iris, or Thomas. If you would love to learn more about climate investing or are interested in investing in any of these very cool funds, both ArcTern, Extantia, or any of several other leading global climate funds, check out carbonequity.com or get in touch with us through email or LinkedIn. Thank you very much. We'll be in touch and looking forward to a tremendously successful climate investing year in 2024. Thank you.
Thank you.
Thanks.
Thank you. Bye, guys.
Bye.